Hello, everybody. Good morning and welcome, as always, to TradeGate Hub's morning market update. Of course, I am your host, Eliman Dambell, and thank you for taking the time to attend the session here this morning. Of course, there is a lot to get through. Last day of the week, of course, a bank holiday weekend here in the UK, so there is quite a lot to cover before we end the session. Apologies for the voice, as you can hear. I have somewhat been struggling. I don't know if it's an after effect of getting this first jab of the vaccine or whatever. But yeah, let's see how it goes. Apologies. Hopefully you can deal with the sniffles throughout the session. Now, guys, there's no better place to start off than gold. There's no better place to start off than gold. But before I do start off with gold, first and foremost, just to say, great interview there on Wednesday. Of course, you guys attended the session on Wednesday, of course, with your man, Jack Swagger, hosted by Dale Pinkett. Great interview, absolutely phenomenal stuff. So I'm glad that you did attend that. And if not, you will, of course, be able to watch the recording on our YouTube channel. And of course, we are hoping to have more interviews from famous names in the industry like that moving forward. So please do subscribe to the YouTube channel. Make sure you are locked in to TGH for more updates on upcoming interviews and events as such. But as far as today, of course, do me the honor, as always, of going through that risk warning in the description. And once you do, again, starting off with gold. If you remember, guys, on Wednesday, we had the analogies about the big bears and the little bears and entering the room and potentially leaving out, hopefully with our heads left on. And what we said, of course, remember at the time, gold was trading probably around 19. Let's actually go back. Let's actually go back, do the work, and see exactly where we were and where we are now. Remember when we had the webinar on Wednesday? Gold prices were around 1914. We said 1914 historically, bears live at that area. That is the number of the door of where the bears essentially reside. And from our own perspective, we just realistically didn't want to put ourselves in a position of being, I don't know, at the door, knocking the door and seeing one of these humongous creatures essentially open. So for those who were potentially bullish at the time, looking at the RSI as well, there was a lot of consolidation at that area as well. So all of the signs were pointing to a reversal. And guys, lo and behold, what have we seen since? And this is what I say about trading. When it comes, especially with moves like this, so far the move hasn't happened as of yet. You can see I have some of a trade in there, but it has essentially started turning around. You are seeing those dojis of uncertainty start to creep in. Gradually, the markets are starting to fade and fall. Whether it will go to where we believe it could go is another story. We have absolutely no idea. It may not. It may not. It could essentially. This could be a trap. This could be a bull trap. This could be, I don't know, some of the bulls playing possum and acting like they don't believe they have the strength to take on the bears and eventually coming on to bite us in the you-know-where. So we could even see something like this take place, a sucker punch from the bulls. But so far, it does look like history is on the verge of repeating itself. We could potentially see some of these red candlesticks enter the fray, taking us towards those 80 and 30, 80 and 49, 80 and 30 levels. So it's a case of waiting and seeing. And just looking intraday, again, apologies for sniffles there. I'm not sure what you've heard in the news, but definitely you wouldn't be able to. Whatever this is, I'm sure it's not contagious, especially virtually as well. But looking at what we have here, we can see somewhat of a slowing down, a gradual slowing down of markets and prices there. Looking at the moving averages, preparing for that downwards crossover. Look at that there as well. I was unable to break through. Remember last time we were talking about that RSI level 54. So you have seen it break down. It is below 54, but we haven't seen it get to 31 as of yet. So it's just hovering just around 51, 52. We're still, I think when it gets to 49, probably once it gets to below 50 is when you may see the real bears start to enter the fray. At the moment, it's just lurking, waiting to see what happens. But the indications are still pointing downwards. Of course, this comes on the backdrop of yesterday we had weekly initial jobless claims figures coming in at 406,000 applications for the week, which ended the 20th. I don't know how I remember all of this stuff by heart. It's sometimes it astounds me, but it came on at 406K for the week, which ended the 22nd of May, which was the fourth consecutive week of declines. Now, this, in a sense, is positive because, of course, in the height of the pandemic, mid-March last year, what we saw and what we experienced was quite a lot of. It was the peak. Now, when we had a peak of the coronavirus, people were looking towards the likes of initial jobless claims as an indication to how the U.S. economy was doing, how the economy was faring, what was the impact as far as lockdowns, how were we seeing jobs potentially lost and at what rate, at what pace, and jobless claims, seeing the amount of people filing for unemployment was, of course, one of the key indicators and metrics to just show us how bad things were at the time. Of course, since then, we have seen, even though they are still trading at record highs in a sense, because prior to, I don't know, the pandemic, I don't believe the highest prior to that was probably around 200K. So we're still around 200K from the historical all-time high, or the pre-pandemic all-time high. But even though it is starting to fall, you aren't seeing markets really gravitate to that as of yet. Of course, yesterday we had durable goods orders come in as well, slightly worse than expected there as well. I think it was expected for a drawdown of 0.7%. It came in at a drawdown of 0.13%. GDP numbers as well so far. The GDP rate so far, Q2 coming in at 6.4% when it was forecasted at 6.5%. So some of those fundamentals are probably, I wouldn't say to blame, contributing to what we're seeing, I don't know, with the dollar, with gold prices as a result. Today as well, we do have a host of data coming out from the US, starting with, of course, core PCE numbers later on, and of course we have the Michigan consumer sentiment as well there at 3 o'clock. So there's quite a lot, and I think once the data comes out today, you may start to see a bit more guidance come out there. And of course, next Friday we have non-farm payroll, so next week is going to be a big week as well from a fundamental perspective. So I think all of this, I say that to say essentially this, that we are gradually seeing, and this is what let me just quickly go back to a daily. Guys, regardless, every time you look at, even though we believe this might fall, it doesn't mean it will take the same path it took last time. It doesn't mean it'll take the same path it took the time before that. It doesn't mean it'll take the same path it took the time before that. Even if it may rise, it may not take the same path it took the time before that, and so on and so forth. So, and this is what I love about trading is the unpredictability, is not knowing, is the uncertainty, is the wait and see, is the I don't know, preparing for a potential outcome, which may not even happen, but just giving yourself the best chance by doing the analysis. So depending on these numbers over the next week, I think we will gradually see, I don't know, for me, it's and again, guys, these sessions aren't here to give you advice. Hence the risk description at the end, at the beginning. But generally, once you have your point of view, once you have cemented and curated your own point of view, I think the key is to stick with that. Of course, that can change and sometimes will. Don't be stubborn and don't be married to your position, but just always make sure that you have a firm point of view and you don't really flip flop on it until again something drastically changes and you need to accept that you may be wrong. Moving onwards, I think that's enough time spending on gold, but I think it is one of the main markets in the last few days. Quickly moving on to GBP USD. Yesterday we saw again a rally heading back towards that 142 level. Remember, we said on Wednesday, even though it was looking like it could be heading towards that 139 level, the longer term time frame was suggesting that this could absolutely be a bull run, heading even towards as high as 144, 145. Of course, at the time, Wednesday as well, that was acting as a floor. So we saw the previous rises which took place there. Again, looking at the RSI in the last few days, it was really it wasn't able to really break out of that 60 level on a solid foundation. So we're seeing it essentially still remain at these levels. And I think as long as we're seeing, I don't know, the cable rate remain at these levels, we may see gold prices do likewise. Of course, the strength of the dollar, in a sense, correlates with the strength of, or with the price of gold. So I think this is something to consider as well. Sometimes when you are sometimes indications aren't just indicators. Indications and analysis isn't just looking at moving averages, support and resistance, Fibonacci channels, I don't know, parabolic SAR, whatever it could be, MACD. Those aren't the only indicators. Sometimes you need to put yourself in a position of understanding the nuances, understanding how certain markets align together. And in the sense of that, you're looking at the dollar. Just look at the uncertainty. There's a lot of uncertainty around at the moment surrounding the dollar in the last month or so, to be honest. In the last month or so, we are seeing a lot of dollar uncertainty. I think it's a case of seeing what is the cause. I think, to be honest, is a lot of people were shocked and surprised. Of course, we're seeing rising inflation, but also that NFP number a few weeks ago. So I think next week's NFP numbers is going to be huge. Next week's NFP number is potentially going to be huge as far as dictating how we are going to continue as far as growth in the second quarter here in the US. Moving onwards, I'm not going to look at the S&P here today. Crude oil, yeah, again, pretty much as we said last session, crude oil again heading towards that 67 resistance is pretty much there, but you see the uncertainty creeping in and creeping in and creeping in. Clearly, we are at that resistance again. I think now it's a wait and see. Are we going to see that 10-day moving average start to essentially fade as far as the upward momentum? Is that upwards pressure going to fade, and are we going to see some declines come as a result? So let's wait and see. But it's definitely going to be an interesting and intriguing one to pay attention to over the next few days. I would say few days. I think what we may see between now and Tuesday, it will be trading on Monday. Of course, the crude oil, WTI crude, West Texas intermediary will be trading on Monday. Some markets will be closed. The FTSE on Monday, so UK markets may be closed there on Monday. But with crude oil, I think we're going to have to wait till Tuesday. Tuesday, or potentially, depending on the rumors on Monday. Of course, Tuesday we know OPEC Plus is going to be meeting and deciding what to do as far as production and so on and so forth. I think I will be very surprised if we don't see a rise for June. I will be very surprised if we don't see production increased by OPEC Plus. Supply seems to be, from the last time, I don't know, when they decided to hold off, we have seen since then, Europe have now, of course, confirmed tourism is welcome, I don't know, pending vaccination and things of that nature. So I do believe we may start to see OPEC starting to have more of a how would I call, of a gung ho approach as far as reopening the production and supply line. So that's one to look forward to. And of course, if that does happen, it is set up. If OPEC say essentially we're increasing supply to match demand, what you will potentially, just fundamentally, we know the laws of supply and demand. We've all done basic economics or whatever else, and we know that potentially could mean for the prices. And at the moment, it is set up for that. At the moment, it is absolutely set up for potentially a decline back towards that 61 level. But let's see how this meeting goes on Tuesday. So that's WTI crude. Bitcoin, I'm literally going to spend 10 seconds, and this is consolidating, guys. And what did we say last session? And on Monday and last session, I know the term "my condolences." Someone said they were going to make a t-shirt. Someone who attends these sessions regularly. So they wanted to make a t-shirt saying "my condolences, Bitcoiners." I don't know if that's a good thing. You'll probably be picking a fight with a lot of people at the moment. But it was pretty obvious. Buying the dip after such a huge drop just makes just no sense. Because personally, I don't believe the dip is done. On a personal note, I think we're still going to be bearish, guys. So for those people who saw that initial, I don't know, rally there a few days ago, are now in a position. This is what we're going to see. People saw the drop. They're like, oh, wow, Bitcoin's down 30%. It's a great time to buy. But again, you're fighting the tide. So at some point, when you're swimming against the tide, I'm an absolutely awful swimmer, so I'm sure this analogy is going to go wrong. But I assume when you're swimming against the tide, at some point, you have, of course, if you give up, that probably is you're done. So you can't give up. Okay, I see where this analogy is going. You can't give up. You take that trade. You're trying to swim against the tide. It's coming to you. You believe, okay, great time to go in there. It starts pushing you back and pushing you back. At some stage, your resistance level, your ability to swim against it may deteriorate. You may start to weaken. You may start to see the guards on the beach, I don't know, running towards you because they see you're losing consciousness and whatever else, and they're trying to come in and save you. And sometimes they may come in and they may save you. In a sense, that could be somewhat of a stop loss. But sometimes, and hopefully this doesn't happen to anyone, but you may just lose consciousness. You may just absolutely have no ability to swim against the tide anymore. And of course, we know what that would mean. And in a sense, I think that's a perfect analogy for what we're seeing there, because people had that initial boost. Since then, you are seeing the natural consolidation, which it was common sense, the first resistance point, and now you see we're at the third, and now it's heading downwards. If this continues downwards over the weekend, the reason I'm spending a bit of time on this, of course, we know this is traded over the weekend. If this continues over the weekend to around 33, guys, let this not break out of 31K. Let the RSI not get to somewhere around 36. Guys, if this gets to around 36 on the RSI over the weekend, you're going to see an absolute, because those historical bears, which absolutely do live there, will re-enter and will continue to push this down, which is why I don't really believe 42 there in the RSI is the floor. This could be heading as low as 26 potentially, but I really believe this weekend will be key, because in the weekends is where we typically see huge moves on Bitcoin. So let's pay attention. Is it going to break 30? If it breaks 30, I think you're going to see this settle at least 26, 25 come Monday. If this breaks 30 this weekend, come Monday, I think you'll be looking at a lot of bearish Bitcoin. So let's see how that goes. But it's one in a way, it was fool's gold. It was fool's gold because I think people have now been somewhat programmed just to believe Bitcoin only goes up. And to be honest, guys, for us, if you aren't investing in crypto, if you're trading, you're loving this. If you're trading, you're loving this. You're looking at the volatility either way, bullish or bearish. Yeah, there's a lot of uncertainty and unwanted volatility, but for the most part, it's still creating opportunities for you, whether you're bull or bear. So it's an interesting one to pay attention to. But for the investor, for those who really bought the dip, that T-shirt, absolutely. Send me one. Send me one of those T-shirts. Once you get them printed, I'll be happily take a punch from some unwanted, some unhappy Bitcoiners if I have to. Okay, so it's BTC USD. One more. We have one more, guys, at this stage. I'm somewhat fighting against the tide, fighting against these sniffles. So, and before I drivel in these sniffles, let's somewhat call it a day. Let's look at one more. What are we going to look at? Let's look at a forex pair. Last session we looked at. I want to see what happened with that Aussie. Was it Aussie CAD we were looking at, or was it Aussie New Zealand dollar? It was Aussie Kiwi, wasn't it? It was Aussie Kiwi. There we go. Aussie Kiwi. Oof. Guys, what did we say? And again, guys, what I don't want with these sessions, because what I'm starting to notice. Actually, no. Let me know. It's going to sound a bit, I don't know, conceited. So let's try and avoid that. But generally, remember there on Wednesday we missed that move there, and we said what could happen next. Historically, you saw those bulls take place there. As you can see, again, not really a surprise there because we had that floor of 30 at the RSI. It has bounced from that level, hence the candlestick we're seeing today. The question is this momentum going to continue upwards? Are we going to zoom out? Oof. If we probably zoom. This is why I say sometimes, guys, you need to zoom out to zoom in. You really need to zoom out to zoom in. Because remember on Wednesday, I really thought that was the support, but now zooming out, we see this was the support, and it's really no surprise. It's not a surprise, guys. We called it on Wednesday. That could we see that bounce? All of the indications were, I don't know, waiting for that. And today, lo and behold, what have we seen? We've seen that bounce take place. The question now with Aussie Kiwi is, what are we going to see? Of course, we've seen Melbourne. I can never be Burn. I'm always using BURN, BOURNE. Melbourne, whatever it is. Australia. Some parts of Australia are now entering lockdown. So as a result, of course, you are seeing the uncertainty that is creating, hence today's rally from a fundamental perspective. But technically, we didn't need to know that information on Wednesday. We saw it somewhat coming. But the question is, how far can this go? Is this heading back towards 107? Is that the next stop? 39 is the next resistance as far as the RSI. We're at 35.3. Are we heading there? And if that does, where does that mean for the price? Even though if you could be bullish looking towards those levels, you have to appreciate the fact that there is a lot of consolidation and uncertainty in these territories. So guys, a lot to get through. Lifeguards coming in for me in the sense of tissues. I need to essentially go ahead and blow these noses before I essentially lose consciousness. So it's been a great session. It's been a great week. A lot has happened. A lot still yet to happen potentially today. Bank holiday here in the UK on Monday. So there may not be a session. There may not be a session. We will somewhat confirm. But aside from that, have a great weekend wherever you are. Lock into TGH. It's a Friday, but there is still a lot of opportunities to be had. So do lock in, and I will see you at some point next week. All the best, ladies and gents.